Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Welcome everyone on Zoom. Welcome guys. We're gonna get started in just a couple minutes. Hope you guys are all ready. We'll go through today's top news and then we'll get into the charts on gold, okay? Trade with proper risk management, guys, as always.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, welcome to Stocks Network Trading. Thanks everyone for joining. Good evening everyone, thank you. It is 6:26 p.m. Eastern and it's an exciting night. We're going to have some fun tonight. We got a good crowd. Thank you guys for joining. We're going to do gold, but first let's go over the news. Let's see what happened today. We're going to do a nice clean top-down analysis and we'll see how everything is trading. Yesterday was a little bit of a choppy session. It wasn't the cleanest volume yesterday, but we had some fun, okay? We learned how to get into some trades, protect our risk management, most important things. My mistake yesterday, I was in 2 profitable trades. The first one went up 50 pips. The second one went up 35 pips for a total of 85. And Ron left the day with basically break even. So thing that I learned last night was I'm going to stick to my 80-20 rule again, because we got to make some money, right? At the end of the day, we got to pocket some money. And so I'm going to go back to trading with a little bit of rules, and that's what we're going to have to do tonight. That's what I'm doing regarding yesterday, because I don't know how Tokyo is going to trade. If it starts really trending, then maybe I'll leave trades for a longer duration, okay? Hope everyone's great. I hope you guys had a good day today. There was New York trading and all of that. It was very volatile in New York. There's lots of news coming out. They released the job numbers, so that's what we're going to talk about. So, yes, Sergio and the Cowboys won. Wow. I couldn't believe that. I thought Vegas was going to destroy them, but maybe the Cowboys can pick it up. But, guys, real quick right now, Forex Factory, we'll get into that. Oh, sorry, and disclaimer. I'm not a financial advisor. We're here at SST. We're here for education, entertainment. We'll try and help you guys read price action, read candlesticks. We don't need a license to do that, but anything you're doing in the markets, the financial markets, consult your financial advisor, go to your local financial institution, consult with your bank. But I can tell you your banker probably won't read candlesticks the way we do and teach you what a market maker move is, what the fuck you move is, and things like that. That we will personally teach you those things, okay? So that's for YouTube. We're not financial advisors. And someone said they heard me open up a can, said, Ron, did you crack a beer? And I said, no, it is right here. It's a Pepsi Max, guys. So that's for that. No drinking on stream. It's a Pepsi Max. And another thing, disclaimer, yes, you might see me smoke some weed on the stream. That is perfectly legal over here, and I do smoke weed on a regular basis. I've been smoking for over 20 years. That I'm not afraid to hide from people. If you don't feel comfortable trading while Ron's smoking, that's fine. I'm just more focused, and it's what I do, okay? And if that kind of, unsubscribe from the channel and go to another channel. But that's as real as it gets. That's when you're getting me being myself, okay? And I can tell you I smoked a joint right before today's call. So let's just get that out of there for all the disclaimers out there, okay? Now, let's get into this. Forex Factory, right now, you see that they released last night, 3:10 a.m. Eastern, okay? This was right when London opened up. Why? What the hell are they releasing U.S. news in London? Unemployment claims. This is because we're so far behind in all of the government shutdown, right? They were shut down for 4 or 5 weeks. So you can see now they're starting to release data. So that's what I mean. Things are going to get volatile, guys. So you got to be very, very, very careful when you're trading, okay? Because they can release folders unannounced now at any time, okay? Does everyone understand that? It doesn't have to be like a folder with a date and time. You can see folders come out at any time when they release these things, okay? So that's just knowing that going forward, you should be trading with proper risk management, right? Just know that until we get through a couple weeks, until the government officially is open up, we're back in business. Regular NFPs are the first Friday of every month. Thursday mornings, 8:30 a.m. are our regular unemployment claims. We have our CPI, PPIs coming out once a month. We have our FOMC regularly scheduled program. Then once everything starts getting in the regular, then we can start to focus back on regular trading. But right now, expect a little bit of volatility, okay? So we had news today. Tomorrow, real quick, if you're trading anything in Europe later tonight, you got pre-London, there is British folders. You have your British UK CPI year over year. Coming in here, we have our FOMC meeting minutes that will be released tomorrow at 2 p.m. This is not the actual FOMC meeting or a federal funds rate. This is a recap summary of what happened at the last FOMC, okay? So that will be released tomorrow, guys, okay? Real quickly on earnings. Home Depot had earnings this morning. You can see that they did not beat their estimate, barely beat their revenue, but guidance was down. If you listen to Home Depot, I listened to the CEO and the CFO speaking, and they were saying guidance is down. They're not seeing the normal traffic volume that they see in the store this time of the year. They're seeing the cost of like a receipt, the cost of the entire receipt is going down. So the entire purchase is down. They're not making as much money as they were in the past. And they said tariffs affected business. So with that being said, that was what we got from Home Depot. Okay, there's other big box retailers that are reporting this week. Lowe's, Target, and some retail stores will be reporting as well. We had the financials, we had the tech, and now we have more big box retail consumer spending. And also, guys, tomorrow, Wednesday, okay, we have Target and Lowe's in the morning, but everybody and their mom is paying attention for NVIDIA's earnings Wednesday, tomorrow, after hours, ironically at 4:20 p.m. Eastern. Please, guys, don't spam the YouTube chat, okay? Because I'm going to have to delete you. It's silly. Don't do that because I can't read anyone's comments. It's stupid. Don't spam, guys, okay? It doesn't get you anywhere in life, and it doesn't get you anywhere on YouTube. Stop spamming. NVIDIA is reporting tomorrow at 4:20. This is a $5 trillion company that is the leader of all corporations on top of the world right now. Number one, right? If we're ranking teams, NVIDIA is number one, okay? So earnings tomorrow could dictate the direction of the market tomorrow. If there's some accumulation going into earnings, the way how we trade tomorrow, the way how we trade on Friday, and the way how we trade going into next week and possibly the end of the year, okay? So please, whether you are trading NVIDIA, yes or no, pay attention to the earnings, okay? And they've beaten the earnings pretty much every single consecutive earnings. This is one of those unicorn corporations that just keeps beating the numbers, keeps beating earnings, the revenue. The bar gets set high every time. After every single earnings, the analysts set the bar higher, and NVIDIA continuously exceeds it. So it's one of those companies, but at some point, maybe it's not going to be a beat anymore. But we also have to listen to the CEO and what he says going into the future, guidance, things like that. What do they have in the pipeline? What's the new technology? Things like that, okay? That's tomorrow, guys. In the news right now, Trump is always in the news with his orange face over here. Trump hints he knows the Fed chair pick may go the standard way. So he's already hinting that he's going to replace Powell over here. And then we might not see Powell again. And then someone new is going to step in, okay? U.S. unemployment rolls, they swelled between mid and September and October. So that's what was released, were those numbers. Sorry, guys. Let me just get rid of this spamming. I hate when this happens, but it's got to be done. It's got to be done. I'm sorry, guys. It'll take 2 seconds. Okay, good. We got the spammer out of here. There, I can actually see the chat on YouTube. Oh, wow. He spammed, I think, like 20 times in a row, and it just made absolutely no sense to anybody, but he's gone. Now I can actually see you guys. Okay. NVIDIA looks set for a $320 billion swing after earnings tomorrow. Financial stocks send warning, threaten to tumble below key levels. This could be all fear tactics in the market, trying to scare you to sell your shares and things like that to create fear in the markets. Remember, fear is one of those emotions, but as not what I say, but what is said in the markets, when there's fear in the markets, when you see blood, you should get hungry to look to maybe start accumulating a position or looking to buy securities when there's blood in the streets, right? That's a saying that goes around. Do you buy a falling knife? No. But do you wait for solid support levels and where it's dropped a significant amount? Yes, like see crypto right now. Crypto is falling below 90,000 Bitcoin. It might even go down to 80, 75,000. But is Bitcoin going down to zero? Probably not. Is there an opportunity to start, positioning yourself to ride a wave back up? Possibly, okay? You shouldn't be getting scared in these markets anymore. If you are over leveraged, yes, you're gonna panic. A lot of crypto traders have all over leveraged and they've been taken out of the markets a long time ago, okay? So that's where leverage can kill you in situations like this, okay? So we learned all about leverage on a risk management bootcamp we did last weekend, okay? So just continuing here, lots going on. The great Bitcoin crash has it lagging the treasury bonds, US bonds, and gold and more. Trump is eyeing deals right now with MBS. If you see, MBS had a meeting with Trump. So that's the Saudi king, prince, whatever he is. They're talking about this. There was mention of going from $600 billion to $1 trillion in investments. Again, that's all bullshit. It's all talk. Nothing is written down. Nothing has actually ever happened. These are all numbers that they're lying to the American public. I think you guys should start waking up right now. How much of those things that Trump promised you have you guys gotten? Remember, he promised $5,000 to everybody from when Doge was cleaning up. You got nothing. There was nobody I know that got $5,000. What about this $2,000 that he just promised from the tariffs? He's not even pulling in that much money from the tariffs. They can't afford it. No one's gotten $2,000 yet from those. It's all smoke and mirrors. It's all talk to get the people excited that they're getting money. You're not getting money. You're paying in taxes. You're paying in tariffs. You're getting destroyed by this government. Same me in Canada. Same shit. We're getting destroyed here too. It's pretty much every government around the world is destroying the working class. And so politics aside, that's what's happening, okay? You can believe this guy or you don't have to. I've been here since day one telling you that this guy is full of shit prior to him even coming into office. And look at now, backtest me if I've been saying correct about this guy. He's a liar. Him and his family and all his cronies that are with him are all billionaires and trillionaires. They're making money. We're making fuck all with these guys, okay? So follow their corruption, follow the money, and that's how we make money. Follow their lead, okay? What are these guys buying? What are they selling? That's what we should be doing, okay? I'm not a financial advisor, okay? I'm just someone that smokes weed over here. Let's continue to go into this. Discord, guys. We sent out signals. This is in the indices channel. I want to teach you guys about static levels and closing volume. That's what we do on these live calls. We were looking for buys above 24,500 for US 30. You can see there's a wick, no volume. Come back down. There shouldn't have been any trade taken here. If you did, again, you got to learn what are impulse moves and you got to learn what are confirmed moves, okay? And then you can see right there, again, it came up. Did it close above there? No. This candle, did it come up? Did it close above? No. Tweezers top highs. Finally, you got a bar that closed above. There's your confirmation candle with volume closing above. You can wait for a retest back down here, or you can learn how to read candlesticks. That's an ignited bar that continued to open, fill that wick. I'm sure it came down, refueled a couple times, and then that's where you might have to pull the trigger, okay? But if you missed it, eventually it came all the way back down to the retest. Did it just stop there and get a wick and go back up? No, it closed below. It came further deep down into the depth of market. Did it break structure? No, it got a nice return wick coming up. That's a higher low. And then you had the big buyers again. Close it above levels. Again, short wick, there's your ignited bar. Did it come back and retest? This situation, it didn't. But if you read this and you got some pips, great. There was some sent out on commodities as well with gold. Like right over here, we're looking for buys above 4,065. Again, there's your bar that closed above. There's where it pulled back, right back down there, and then there's your move taken off. There's where it retested body to body and 50% of that body and continuing ignited to move. And then also, guys, FX. There is some pairs. If you trade currency, here's USD JPY on the 1 hour. Again, same situation. We're looking for volume to close above 154.54. There's the closing price above. If you wait for the pullback, you have to wait 1, 2, 3, 4, 5, 6, about 7 hours. And then again, the volume came back up, closed above. Multiple retests. You could have been in a buy, had a stop loss below, and then there it is, taking out the resistance, pulling back. Continuing, looking right here, resistance, 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 turns to support, and there it goes running for new higher highs, okay? So if you need signals, if you need trade ideas, we provide those as well here, okay? Everyone on YouTube, thank you guys for joining, almost 200 viewers. I appreciate you guys. There's a free Telegram channel. It's pinned at the top of YouTube. Everyone, please join it right now. It's a free Telegram for you guys. It gives all of the links for our live YouTube sessions. There's the before and after of our trade recaps that we send out to the group. Comments from you guys on YouTube. We give you guys shout outs. This is the whole market basically riding on NVIDIA. NVIDIA is the big bull of the market. There's the US economy. There's the stock market. This bull is getting sweaty and he's getting tired of holding the entire market. So we'll see tomorrow if this bull has had enough or if this bull is going to continue driving up, okay? And everything is provided on this free Telegram for you guys, and it's pinned there, okay? And then finally, guys, here's our website, stocksnipertrading.com. Lots of stuff here. Education with myself, with Dave and myself. Courses, webinars, boot camps, all of these things, long form webinars. If you need to learn, this is like a education, guys. This is like going back to school. This right here is your college, your university degree in a nutshell right here. If you can spend an hour, 2 hours a day going over this stuff, I'm sure you're going to improve your trading one way or the other. And it's not just price action. There's a lot to do with price action, but we also talk about fundamentals, technicals, risk management, overall psychology, everything to become an overall sound trader. That's what you got to be in these markets, guys. Our live trading sessions right over here. So Dave is doing New York's. I'm doing all the Tokyos next week, and then we're going to shift over back to New York next week. Okay, guys? So, and finally, thank you to everyone who's subscribing. Appreciate all of you guys. It's a lot of love, a lot of respect from us at SST to you guys as well. Thank you. You guys are what's growing this channel, and it's giving us motivation to continue to be here on a daily basis with you guys and share our knowledge with you guys. And thanks to everyone on Zoom as well that's going over from Zoom, going to YouTube, hitting the subscribe button, hitting the like button, commenting in there. Thank you guys, to you guys as well on Zoom. It's really, really, really appreciated for all of you guys, okay? We're going to get into these charts. So welcome, everybody. Thanks, everyone, for joining. Sergio, thank you for joining. Prashinditya, welcome. Welcome, brother. Sergio, thank you. Thank you to you, Sergio, for going to YouTube and hitting the like button. I appreciate you. Justin, you as well, always doing it. Thank you. Thank you, guys. Adrian, welcome. Welcome, guys. Dennis, thank you for joining, brother. Welcome, guys. Okay. And everyone on YouTube, shout outs to you guys as well. From the top, before we had that spammer in here, Charles, #1, man. Thank you, bro. I appreciate you, Charles. Thomas, thank you. Justin, again, thank you, brother. Just running it down. 420, I love the name. Thank you. Beeb, welcome. Thank you. And I see you're rolling one up too. J Angel, welcome, brother. Smoke and trade responsibly, okay? Moisey, welcome, welcome. I love the name Moisey. One of my favorite baseball players was Moisey Alou. I love him. He's an old school baseball player. Okay, guys? So, shout outs to everybody. Hit the likes, hit the subscribe. Let's get started. I'm going to do a blog for everybody before we get started. We were talking about poker and trading, and someone said to me, Ron, I play poker. If you can kind of translate poker to trading, it will help me. Guess what, guys? I play poker too. So I can do these two things. I can combine trading with sports, with baseball analogies, football analogies, hockey analogies. That's what trading is. It's like a sport. It's like a game with rules which have to be followed. But a lot of you guys maybe play poker as well. Maybe some of you guys are really good at playing poker. Some of you guys maybe stink at playing poker. But poker requires probabilities, odds, calculations, risk management, clues, everything we do in the market. So let's read this blog real quickly together, and then it's available for you guys after the call. So I just posted it right here. Similarities in poker and trading. Let's read it over. So poker and trading share an intricate dance between skill, psychology, and risk management. Three of the biggest things in trading, and poker shares the same things. Both require keen analytical abilities, quick decision making, right? You got to know if you're playing poker and you got to make a quick decision and you're looking at your hand, the pot, how many players are in there, you got to make a decision whether you want to pay to advance to see the next card, call, or you want to just get rid of your hand and you know that maybe you're behind or you've lost. So that was like me in a trade live, where sometimes I'm ahead and it comes back down to break even, and then sometimes I just want to get out of the trade. It's like me in poker just throwing my hand in the muck, you know, and just getting rid of it and waiting for another hand to be dealt. You know, you don't always have to hold your hand. Whether you take a trade, you don't have to hold to TP or stop loss. There's a lot of things that happen in between. There's a lot of variables that you can maybe get out of the trade. It's like when you're playing poker and you don't have a winning hand, you just stay in there and keep putting money in the pot when you know you're behind, or you got other players re-raising you. You got to know that you're behind, so you got to throw your hand away. Just like trading. Sometimes you might have to exit your trade manually and just wait for another setup, okay? And the courage to act under uncertainty. In poker, players assess odds. Hopefully, if you're a good poker player, you can know how to calculate mathematical odds. Opponents' tendencies, picking up clues. Remember, we picked up big clue, or when the market is getting fishy, or those FU candles, or where you're questioning whether a candle closes 99% 9 to the high and then next one opens and it's a bearish ignited candle coming down, you got to ask questions. Like, that's a clue from the market. And hand strength to make strategic bets. Similar, traders evaluate market conditions, trends, financial instruments to execute informed trades. Success in both arenas hinges on discipline, emotional control, and the ability to adapt strategies based on changing scenarios. As in poker, where a bluff can change the game, in trading, calculated risk can lead to substantial rewards, making both fields a captivating blend of art and science. Trading is a skill. Okay, so, it is a skill. So you got to do other things to help you with this skill, okay? Let me give you a few things, some suggestions, okay? So relating poker to trading involves drawing parallels between skills and strategies required in both activities. Number one, playing poker and trading, you have to have risk management. In poker, players manage their bankroll, right? If you're sitting at a 5-5 no limit table, or you're going to the 50-100 table, there's higher limits. It's like trading with bigger lot sizing. If you're more of a beginner trader or beginner poker player, don't be going sitting at the high limit tables when you have no idea what you're doing. It's like trading with Lambo lots and bigger lot sizing when you have no idea how the markets work. How do you think you're going to survive when you're trading or with experienced traders trading with big capital, and you're coming in there trying to trade with leverage and get lucky and gamble? It's not going to happen. Look at the poker tables. Doesn't happen. Always when you see at the final table, there's players that always continuously get there because obviously they know what they're doing, and then you can throw luck out of the equation. A lot of people say, oh, it's luck, it's luck. Gus Hansen, Phil Ivey, Daniel Negreanu, like the best players in the world that constantly in a field of 1,000, 2,000 players get to the final table in every tournament is not by luck, right? So there has to be some sort of skill involved, okay? So poker players manage their bankroll, deciding how much to bet based on their hand strength and perceived risk, calculating pot odds. Should I see the flop and see the turn card? If there's $100 in the pot and it only costs me $10 to see the next card, you're getting 10-to-1 risk to reward. Basically, when we're trading, as traders, we're looking for a 1-to-1, 2-to-1, 3-to-1. If you can get a 5-to-1, it's great. But also, poker players calculate how much money is in the pot to see the next card. So if it's good amount, good probabilities, good pot odds, then it's worth looking at the next card, okay? Trading. Traders allocate capital, determining position sizes based on market conditions and risk tolerance. Hopefully you guys are learning all about position sizing. Probability and odds. In poker, players calculate pot odds and equity to decide whether to call a bet or not, right? In trading, traders assess probabilities of price movements using technical analysis and historical data. That's why we do a top-down analysis. We look at historical data, we figure out points of interest, we figure out points of control, we figure out high-value trading areas, and we trade with high probability with good risk management. So it's just like playing poker, doing it responsibly and smart. You know that in poker, the casino is the dealer, and when we're trading, the broker is the dealer, right? So there's a dealer and we're the players. In trading, the broker is the dealer. We're playing their game that they're offering. Just like if we go to the casino right now, we sit at a poker table, all of us can play together. The casino is the dealer dealing us the cards and raking in like they take a cut from the pot. That's the rake, or session fees. That's like exactly what a broker does. There's commission fees and slippage and spreads. That's how they make their money. So you got to consider trading is the same like a casino, but there is traders that are very successful, and then there's traders that are gamblers. Okay, just like in a casino, you pick who you want to be. Okay. And what else do we got? Okay, so probability and odds. Psychological discipline. If you guys play poker, it's a very psychologically demanding game. And if you guys trade, you guys know how intense psychologically trading can get. So poker, keeping emotions in check is crucial. You guys know if you guys play poker, as tilt can lead to poor decisions. If you guys don't know what tilt is when you lose a big hand, like, when you get rivered where you got a full house and the last card comes and someone calls you and they river, the last card is a bigger full house than you and you went all in and you lost, that's where you could flip the whole poker table, get pissed off, and then come back, and then you're playing on tilt. You're trading, and you're not even looking at your cards. You're just mad, and you're re-raising people and trading can be the same thing. If you lose a trade, you can go on tilt, and then you're going to start revenge trading. You're going to start over leveraging. You're doing exactly what a poker player who is on tilt is doing. This is where you got to control your emotions. You got to breathe. You got to walk away. Like a poker player needs to walk away, get some fresh air. Same with traders. Need to go for a walk, come back an hour later before looking to take another trade. That's where you have to learn this discipline. This is where I feel a lot of like beginner traders are lacking this discipline. Myself too. You heard me last week where I wanted to smash my monitor. That was true. But I didn't. I walked away, I got some fresh air, and I came back. And there was no monitors that were being smashed. And I got back in the markets and I made some profitable trades after that, okay? It's just walking away from a situation and remained disciplined. Treat it like a business. Remain professional, okay? So in trading, maintaining discipline prevents impulsive trades driven by fear or greed. Information gathering. Remember, I'm always saying, guys, when we're not in trade and YouTube is saying, run, buy, sell, buy, sell, buy, sell. And I'm saying, guys, relax. Let's just gather information from the market. Let's see if we're going to see any clues. Is there going to be any liquidity grabs? Do we have any fake outs? Do we see any structure being respected or not respected? Okay, so that's where I'm gathering information, not for myself, but for everybody on the call. So sometimes we don't always have to just go into a trade and just force trades because someone on YouTube is in drawdown and wants us to get in a trade and help them. No. Trading is information gathering, as is in poker. If there's 10 people at a poker table, I'm gathering information from the 9 other players when I'm not in a hand. If I'm not in a hand, I'm watching my 9 other players for clues. Are they scratching their cheeks when they're in a trade? Is there anything that's showing me that they're showing their nerves? Anything tells. So that's why I watched candle by candle the market. I'm doing that because I'm looking for clues from the market. You know when I hate flip-flopping from chart to chart to chart? That's why. Because I might miss a valuable clue that could cause me from making a profitable trade to a losing trade. So you got to understand trading is also, if you're not in a trade, you're gathering information, you're watching the charts. You're not scrolling on TikTok and you're on the charts. If you're on the charts, make it a habit to watch what's going on the charts, guys, okay? This is really important, guys. I know a lot of you guys are saying, Ron, just go to the charts right now, but you wouldn't believe how valuable this information is I'm giving to you. I'm trying to relate it to poker because I know a lot of you guys play poker and I play poker myself. So this I can relate to you guys. And if you understand this, I'm telling you, tomorrow and tonight, you will become a different trader. I'm telling you. This is, I pray to God that someone would teach me this when I started trading, okay? Information gathering is critical in the markets. We might go this Tokyo session and we're just gathering information. I might be gathering that information to trade after Tokyo. I might use it going into London. I might use it going into New York tomorrow. You're gathering information. Information is valuable. Sometimes that's why I say I use a feeler trade to gather information very cheap. If I get stopped out while I'm using a feeler trade, I don't care. I lose a couple dollars. It's not a big deal. It's different from losing a couple $100 or a couple $1,000. So sometimes when you're gathering information in a range, if the market is trading sideways, don't go all in. That's like playing poker where you want to call, where you got a shitty hand. You got like a 9-7 offsuit and the flop comes ace, 10, jack, and you're going in. Where are you going? You got no business even seeing another card after the flop. You got a 7-9 offsuit. The flop came ace, jack, 10. You have all whole cards are above you. Anyone is beating you right now. You're basically going in on a hope and dream to see another card and see. You're looking to run a turn and runner on a straight, which is mathematically basically impossible. And if you have bets ahead of you, you got someone betting with an ace and a jack, they're betting, re-raising, one guy's going all in. What business do you have? You should be throwing those whole cards in the muck so fast. So that's like trading. You should, if you see the market is kind of consolidating in a shitty range, you shouldn't be going all in or over leveraging. What are you doing? Like, you should be going small sizing, gathering information. If you get stopped out, you lose nothing. okay? You'll lose, but you'll lose a couple dollars as opposed to hundreds or thousands of dollars, and basically hitting your daily drawdown and then causing you to revenge trade, causing you to go on tilt, causing you to be pissed off and say that the markets are rigged, the markets are corrupt. No, the markets are going to do everything what they do every single day. It's just an excuse that traders say the markets are rigged. The markets are like a casino, a dealer. They're going to deal you cards. You don't have to take the cards, right? If we play poker, the dealer's giving me cards. I look at the first two cards. If I don't like them, I throw them back. Again, next round, he's going to give me two more cards. I look at them. If I don't like them, I throw them back. I don't have to be forced to take those cards and play with them. Same within trading. You got to understand, guys, there's different conditions where sometimes setups are not as high probability as other setups, okay? So you got to know what you're trading and what risk at certain times. Adaptability in poker. Players adjust their strategies against different opponents of table dynamics. You might have a poker player against you who's very aggressive. So you got to learn how to trade against aggressive markets. Markets can be very aggressive, high volatility. You got to know how to trade those markets. Whereas you might get a very passive poker player. He sits there. We call them like rocks in poker, where they'll sit there and the only cards that they'll play is pocket aces, ace king, pocket kings. They will even, like if they got pocket tens, they won't even play them. Like these guys are rocks, solid rocks, but they're easy to read because when they're going in, you know that they have a big hand. You know, you got to kind of mix it up in poker. You got to be able to play, you know, some other cards, not just whole cards, big cards. Same within trading. You got to know how to adjust your trading strategy. You got to know how to trade. You might be a scalper today, maybe tomorrow you want to be an intraday trader. You might also do some swing trading, and you got to know how to adapt. Same within poker. There's a lot of different styles in poker, and same within trading, there's different styles. My suggestion to you is to learn all of them. Learn all of the strategies that you can. You might be better in other ones, but at least you still know. So you can always go to your toolbox and use a different strategy, okay? And in trading, traders adapt to changing market conditions and revise strategies as needed. For a lot of traders that were trading through this US government shutdown and they never adjusted their risk and trading gold how it was, I guarantee you a lot of your friends and family that were trading probably lost a lot of money, probably blown accounts, and they're probably never going to trade again. But why did they not adjust their risk during this difficult time in the markets? So that's what you got to do. Finally, there's long-term strategies in poker. Success depends on consistently making positive expected value decisions over many hands. That's probabilities, okay? Same within trading. We look for good probable setups. Are they 100% perfect? No. Are pocket aces 100% perfect to win every single time? No. So you got to understand they have higher value, but they're not 100% guaranteed. But if you back it up with proper risk management, you are doing good. And if you this can be for sustainability for more than just trading tonight's session. Because last night we had someone who blew up an account. Prior to me even getting in a trade, I don't know how, because our trades went to profit. I'm not sure how they blew up an account. That's still puzzling my head. But anyways, that's their account. That's what they need to think about. And so you got to understand, trading is not just for tonight. It's for tomorrow, next week, next month, next year, 5 years down the road. You guys want to be successful traders 10 years down the road? Or are you guys just looking to do this for tonight and that's it? You got to have a long-term approach. You got to think, guys, long-term, okay? Make sure you're thinking long-time horizon. Then it will teach you how to utilize your entire capital and trade it properly over time, okay? And finally, by understanding these similarities between poker and trading, poker players can better grasp the mindset and techniques involved in trading, okay? So I know it's a silly little blog, has nothing to do with trading like poker, completely different games, but I'm sure that you can learn something from each of them, okay? Okay, let's put poker aside now. This is the dealer right now, okay? The market is dealing us candles right now. So we got to look now at the candles. We got to analyze. This is how it's moving on the 5 minutes. I'm going to do a top-down analysis. If everyone is ready for a top-down analysis, hit the like button on YouTube. If you're learning something with SST, subscribe to this channel and grow with us. The more we grow, the more we'll teach, the more we'll be here. Longer hours and different sessions all over the clock, okay? So I'm starting with gold, XAUUSD Forex. If you guys are in the futures, you guys are on your GC contracts. Candlesticks patterns should look similar. Numbers are different. I understand this. But patterns are very difficult. Very similar, okay? I'm going to start off with the daily, okay? So let's do a top down. So now we have the same basic structure, what we were looking at yesterday, okay? Do we have an all-time high? Yes, it's right there. I'm painting the all-time high orange for Donald Trump's makeup on his face. There it is. So you can always think when gold's at the all-time high, it's Donald Trump's face up there. And this is the all-time high supply zone. I brought it from the all-time high orange line down to those bodies right there. I always tell you guys, sometimes it takes 2 to 3 bodies to determine structure. It's like in trading. You get two, listen to what I'm saying, guys. This is how I'm going to relate today's call to poker. In trading, you can identify off of 2 bars. You can find the point of control. You can find where bodies open and close. You can determine the wicks. You can determine whether there's higher highs, lower lows, or equal highs and lows, or it's an inside bar, just with 2 candles. And you can determine structure. So it's like playing poker when the dealer gives you 2 hands, your hole cards. That's where you make your determination if you want to go forward. If you get aces, pocket aces, you're probably going to raise and play those hands. Ace king, ace jack, shit like that. If you get a 2-6 offsuit, you're probably going to throw that hand back in the muck unless you want to bluff your entire way. Because if you get called down, you're going to have to turn those cards over and you're going to look like a fool on that poker table. So if you see a shitty setup and you want to continue to go, that's on you, okay? Otherwise, do this. Look for structure, stretch into the future. Reason why we stretch into the future is another time if we want to come to the casino, maybe I can't go to the casino tomorrow, next week, next month, maybe I'll revisit the casino next year. But if the casino is coming back where it had a lot of trades, a lot of traders were trading in there, that was the all-time high. If it ever comes in there again, I want to be at that casino at that night, because that's where there could be some good probable setups, okay? So that's why I place an alert up there at these zones. Reason being is because I don't know when I'm gonna go back to that casino, like the markets, but if I get an alert, I'm alerted. Then I know there's a lot of gamblers coming into the casino. Do you guys understand what I'm saying? I'm trying to relay this to you guys in another fashion tonight, okay? If you gotta smoke a joint, smoke a joint. Maybe it will make more sense that way. If it's legal in your country, okay? I live in Canada. You guys are welcome to move over here, and it's legal over here, okay? A good quote, Justin. Think like the casino, not the gambler. Absolutely. You've been to Las Vegas, Justin. You see how it's built. It's built off of slot machines and blackjack. So the house always wins, right? So we know that the broker will always win through commissions, spreads, slippage. So we are already losing before we even take a trade. You guys understand that? We're already behind. So if you don't nail a trade with minimal to zero drawdown, you are further in the hole. And then if you compound that with over leveraging, there's your answer. That's why retail traders are unsuccessful. Okay, so we found a nice, solid, all-time high supply zone. Again, this big body base candle, this is like having pocket aces. That's like having pocket aces. That's a beautiful candle. We can get a lot of analysis out of this. This is a candle you got to learn to recognize what these things are and do what I'm doing right now. See what I'm doing? I'm cutting it in half. From the open to the close, cutting in half. I'm going to yellow lines now. Yellow I use for everything I do on the daily. Now, also, I don't want to neglect that there's a point of control there. I don't want to just cut it in half, but I want to find the 382 and the 618. It's called point of control, pocket of control, golden zone, hot pocket, Mickey Mouse zone, whatever you want to call it, okay? This is like, in poker, the flop. This is where they drop the 3 cards. This determines whether you're going to go see the 4th card. You know that the flop in poker is the most important time. That's where the dealer shows 3 cards. And then you have to match your whole cards with what those 3 cards are on the board. You guys understand the analogy with poker? And I'm relating it to trading. Some of you guys are saying, holy shit, I've never played poker in my life. Now I got to learn how to play poker and I got to learn how to trade. No. This is for, I'm not putting that on you guys. But poker is a great game, not for money, not for finances, but a game to get your brain thinking. Just like I said, playing Tetris is a great game. Poker is another great game that gets your brain thinking. As long as you're thinking the right stuff, mathematics, probabilities, and clues, not gambling. It's a fantastic game, okay? So this is basically, the dealer now has made a flop right there, showing us right there. So let's see. So we got ourselves, if you did this right away, see that yellow line? If you placed an alert there and you created it, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days before it revisited the casino right there again where traders wanted to see that flop. Now, this is where they show the 4th card, you know, the turn in poker. So there's going to be a lot of high probable trades taken up there because they want to see the 4th card. So these are buyers buying into this to see if it will continue to come up to this all-time high supply. As soon as it came right in there, look, 50%, look at what the sellers did. They rejected it back down, closed it below. Next day came up, retested, rejected, lower high, lower high. This point of control is still holding, and there's your bearish leg coming down. So that's where you could sell here, stop loss above there, and take that leg down. Now you see we've been consolidating down here. So we could continue seeing buying pressure coming back up and trading back into this red zone. But look, we also have another big bearish candle right here that was printed on Friday last week. Okay, so let's do the same thing because volume is still below and we have not transacted into that body right there. So let's do the same thing. Open, close. Right? Everyone follow me. This should be easy for everybody. Goers 50%, cut it in half. Remember Ron said, listen to that song in the background, OT Genesis, Young Dolph, cut it. That's our theme song, okay? That's our theme right there. Cut it in half. When price gets too high, what do? We cut it. When price gets too low, what do? We cut it, okay? Bullish or bearish. If you see a solid body, cut it in half. And then finish it off with finding your point of control right there. Okay, and get in the habit, final thing, is stretching it into the future. Have we revisited this area? The answer is unanimously no. No, we haven't. We came up to it right there, November 17, Monday, the start of this week. We can place a point of interest there if we like, and we can see 4,106 was the high of the week, and it didn't even come into that zone. What is that telling you? It's telling me that the sellers, follow me, the sellers that sold the all-time high, follow me guys, have now positioned themselves to protect the all-time high by offering in this point of control and continuing to push the market down. But now it created that double bottom where it came up. So let's see now if those sellers are continuing to control this zone, if it comes back in here. So gold could possibly come right back in and go right back down. However, if the buyers close above, we'll flip that point of control green, and then we could make our way back up to this zone and test this zone. With more momentum, a higher low, it'll probably break out and try and come up to here, okay? And that's zone to zone trading. That's more if you're a swing trader on the daily. But we could do the same analysis on 5 minutes, okay? So see that? That's a zone there. Continuing to push down. I see some points of interest right now. I can see Monday, we came all the way down and it came back up. Look at where the volume closed, yellow line. Yesterday, we opened, it was very bearish, it took out, lower low, but as soon as it came right back up, remember, look at the number, just below 4,000. We said, guys, if gold comes down to 4,000, rewind last night's call. If you guys were sleeping or scrolling through your TikToks, you guys missed me saying 4,000 is an unbelievable area to look for buys. Why did I just pull that number out? No. It is a nice psychological number, but if you look, where did this bullish, huge bar start from? Right here, 4,000. Look at how it opened. It opened bullish, ignited. This now, all of those multi-days just came down and retested that opening balance. And you can see the buyers brought it right back up. They came up, right up to there, to the point of interest of the closing body, and push it down. So we closed right there. Okay, so it didn't engulf, but we had a really nice returns. So we got 1 wick, 2 wick, 3 wicks in the zone. I could make this a green zone right now and stretch it into the future, but I want you guys to see this double bottom right here, because this is very important. This is where the all-time high leg was coming down. It went back up lower high, and right there, that's where a clue. That's where I say the market should have broke down right there. Reason being, you had this huge leg coming from the all-time high. Right there, stopped. First pivot. Came back up, lower high. Resistance, neckline. Came back down. That second leg traditionally has more selling pressure. Right there, it should have broke and pushed down. You see? The second bottom, exact location, held it from breaking down. And that big bullish candle, where all of those buyers who accumulated, they redistributed. That's why that opening candle was so important to look at that low right there. Now we pushed all the way up, and then you see where it got rejected in 50% right there, and now the sellers are bringing it right back down. But right there, they were pushing down, and no volume closed below there. Now the volume is concentrated right here. So are we going to get buyers continuing to push up, trade into 4,125, that red block? Are we going to get rejected back down, or are they going to break it through there? Okay, so follow me now. We'll look at today's now. Let's follow the volume. Okay, so we came down, came back up, opening balance, came up. That was the high of yesterday. I see a body and a wick. That's another point of interest for tonight. Let's see if the buyers can get above 4,080. There's a body close, a body open, and look at yesterday's high. It's right there where they rejected it down. We're coming up there right now, okay? But it's still a lower high, okay? So look at how we closed. We closed right here. The rejected, closed. We closed at 4,067. My daughter is going to love me when I'm saying 6767 right there. They love this 67 shit. But right there, there's where it closed. It opened 4,067. Okay, that stupid meme. And when it opened, look, there's a small wick. So it's not technically bullish ignited to continue to push. It opened and it was initially bearish. But look at how tiny the wick is. Okay, I'm going to make a purple line just showing you, like we're $1 away, 10 pips from when it opened the drawdown, okay? So what you need to do is also look at this yellow to yellow. Chart 50% of yesterday's bullish volume. If we have to come back into here, that would be a good opportunity to see if the buyers are holding a wick right here. So if today's candle flips black, they could easily take out that low of the day. Then look, a black candle filling black, and then revisiting right here. Why right here? Grab your Fibonacci tool, opening volume of yesterday's and closing right there. See where Ron is? Right on 50%? Exactly, right there. 4,055. That's where if it comes down, we should see a wick there. We should see buyers stepping in either right there, or you can do, again, you can draw your zone if you like, just representing yesterday's volume. That's your point of control of yesterday's volume. If the sellers flip today's candle and come in here, I want to see if the buyers will hold. If they can't hold here, then guess what? We're revisiting right here, 4,044, and then we're barcoding. Then it's black, blue, coming back down black. Black could break and start filling wicks down, okay? So that's what's holding the market. You see, we are starting to basically curl back up, but we still have a lot of selling pressure behind us. So if we're buying, we're still counter trading the overall move above us. But let's follow the volume. So we opened and it was very bullish. It just got rejected right there, 4,077. That's our high of the day. I look at relative to today's high compared to yesterday's high, it's lower. We're still below those bodies of interest. We're still below this wick. We're still below that point of control where the sellers are. So when we look at this overall pattern, it is kind of building back up, okay? And it is overall bullish, okay? If you were to show me from all the way from here, from over the summer, we hit the all-time high. This is a nice little pullback, but it failed right there coming back down. So are we getting another strong leg to continue to push up, or are sellers going to bring this thing right back down? So I'm going to go off of the daily and go to the 4 hour. I want to see how it was trading like earlier today. So I can see right there, Monday is 10 a.m. There's the close of the day. There's opening. This is 10 p.m. Here is Europe. So Europe showed the bottom. Europe showed 4,000. It hit it in Europe from 2 to 6 a.m. Europe brought it right back up and it closed. Here's now 6 to 10 a.m. this morning. This is, you got to understand this 4-hour candle because this represents pre-New York, COMEX, and a little bit of Wall Street and North American news at 8:30, 10 a.m. Okay, so it opened, it came down. Where did it come down to? Guys, like measure that big body of that candle from London. Okay, grab your fib tool, cut it in half, look, and draw your point of control. You can do this on 4-hour candles. You can do this on 1-hour candles. You can do this on 1-minute candles. It's all candlesticks have the same characteristics. Look at right there. It tapped right into that 4-hour point of control. There's exactly 50%. It came in there and those buyers were pending. Those smart buyers from London didn't want to buy the highs. They're not FOMO traders. They're disciplined, smart traders. And they waited for the market to come in there, pick them up, and look at, pick them up, put them in profit and big profit. They didn't even realize a penny of drawdown. Why? Because they positioned themselves perfectly for that buy. Okay, so when I go either to the 4-hour or 1-hour, I use a white line now. Okay, so that represents now I'm looking at hourly time frames, no longer daily. So I can see there's a nice sharp V recovery on the 4-hour, big drop on the 4 hours, and a big push up. And now look at where we are. We're literally trading right back in the consolidated shoulder. Look at here where the 4-hour candles we're consolidating right here. Trap this volume in. Black, blue, downside. Came back up blue, blue candle, black candle, blue candle. So we are accumulating. We might continue to accumulate in this range. Do we see any 4-hour candle closing above here? No. All I see is wicks. Okay, they've all been fake outs. And if we close black below here, we might push a little further down. So you can see the 4-hour candles are accumulating in this zone right here. Okay, so it looks like a left shoulder, inverted head, and a right shoulder. This is your typical inverse head and shoulder pattern. Left shoulder, inverted head, that big V recovery. Now we're consolidating in the right shoulder. Right shoulder has a high probability of continuing to break out bullish up here. But we've seen a lot of breakouts that have all been false, fake outs. We need to see a nice blue bar closing above here so we can confirm it closes and maybe pull back for re-entry here or somewhere 50% in the zone. And then we could see it continuing to gather, fill those wicks, and maybe trade up to that daily position, 4,106, maybe back up to that point of control, 4,125. Okay, but there is sellers that keep pushing this down. Look at, there's a lower high, lower high, lower high, lower high, and a lower high, and a lower high. So from the top, sellers are still pushing down, but it is still building from the bottom. So this is where the markets get tough to trade. They're consolidating. So let's go a little further. Let's dissect and go into the hour. Let's see now, okay? So now I can see exactly when it came down, coming down. So I see 2 a.m. It made the lowest point. There's London, 3 a.m. There's 4, 5, 6, 7 a.m. There's COMEX, 8 a.m. Big bullish move. Some New York news as well. It came all the way back up there. Then they returned it 10 a.m. back down to there 11 a.m. Came back up building. It kind of closed strong right at 2 p.m. and then 3 p.m. back down power hour. And this is where we're trading on the 1 hour now. So you see the 1 hour candles, we're in this range right now. So what I can do is kind of just, maybe increase this consolidated zone up to the hourly bodies. So this is where we're trading now. It's going bullish, bearish, bullish, bearish, okay? So this is what's going on the hourly. Again, what is the overall trend? Still, if you drew like just on the hourly, if you were looking from here, the market was pushing down. It was pushing down, but right there kind of broke right around here. So we are trading above this. So we could naturally continue to break out bullish above here. However, if these sellers are strong and they're there, lower highs, they could literally push this down, back down into this green zone, maybe back down into this yellow line. So if you're looking to buy gold, you can be waiting for 4,055. You can be waiting deeper down into here to look for buys. Or if we're looking to buy, we got to look for some confirmed blue candles closing above this structure. Otherwise, we're looking to buy pullbacks or to sell down with this market. So let's go into the 5 minutes now. This is the 5 minute structure. Okay, so this is what we trade here when we're live. We want to see some candles to trade. You see in here where the 5 minutes are struggling up here, coming in, back down, coming in, back down. Again, it came in here, back down. Came in again, blue, black, leg coming down. So you see this zone up here? All of this shit up here, I'm making it red to represent the resistance, the sellers, the supply, whatever you want to call it, this red zone. Because I can see where the buyers came in, the move went right back down. Let's stretch it into the future. Again, you can see when it came in the red zone, it went right back down. Let's stretch it into the future. You see now the high of the day is right there, 7 p.m. It didn't even transact in our red zone. So the sellers are still there pushing this thing down, okay? Do we have any kind of structure being built on the 5 minutes? There is a little bit. When it comes down to this daily point of interest, the lowest point of the day, we see it moving up. It's coming back up, pulling down, higher low, new higher high, pulling back down, and new higher low. So we are in this channel right now, right here. We're in this channel right here. This is the channel we're in. You can trade if you like, okay? But I want to see more so what's going to happen tonight. Are the buyers going to be able to break this red zone, you know, even an impulse? But I'm more concerned to see, will any blue volume close above here? Because if it pulls back in here, I make this green. It could build here green, and then we look for buys back up there, okay? That could be what we're looking for tonight, option 1, okay? So put this in your playbook. That could be option 1. But this is with closing volume, closed blue candle above here. We could also get an impulse fake out candle. Remember, we're talking poker. We got to read what the dealer, like kind of our opponent is showing us. And then we got to watch for clues. It could break out big blue candle impulsively, catch a wick, get rejected back down, and then close, and then the market could sell. And if you buy that breakout before confirmation, you're screwed, okay? So that could happen. That's option 2. We have to watch for it. And then option 3 is it's coming right back in this red zone, and it will get rejected and maybe push back down, okay? So regardless, what I'm doing is watching to see what's going to happen inside this area, okay? It's building itself back up, okay? So it's coming up strong, but we've had 1 rejection, 2 rejection. This could be like a triple top, you know, where it came up one time there, went back down. Came up again, 2 tops, went back down. Coming up again, might be like a 3rd attempt here, and they could bring it right back down. That's why I'm looking to see if the buyers can literally do this, okay? And I'm not in a trade right now. It's 7:23. In 37 more minutes, we got the futures market open. Wow, Lee, you caught over 500 pips on gold because you saw the bounce off 4,000 and bought yesterday. See what I mean, Lee? Targeting those high daily areas of interest, points of interest, psychological numbers, and 4,000 was represented by that big daily candle that started the big move, right? Right here. All of this double bottom, there's where it opened, ignited, and had that big impulsive move. And then there it closed above. But finally, it came down to retest. Down in there, there was that opening balance, bullish ignited candle. And as soon as it came there, those buyers that bought that opening day position on November 10, they were protecting their position, probably with another buy there as well, or had other traders also joining the party right there as well. So that is fantastic. That's what trading's all about, guys, is targeting, doing analysis, and waiting patiently and disciplined for your setups. If you find that you're not patient, I would recommend stop trading until you learn discipline. I don't know how you can learn it, but you gotta be disciplined in trading. Otherwise, stop losing your money, okay? I'll tell you right now. If you guys feel good throwing your money to these brokers every single day, your hard-earned money, and you still want to continue doing that without learning the proper way of trading, that's on you, okay? But there's other traders that say, that's it, I'm done. I want to learn how to properly trade. And if that's you, subscribe to this channel and we'll help you with that, okay? So do you see this big bullish candle? Can we at least cut this candle in half? Let's do the same things we do on the daily, on the 4 hour, on the hourly. Same thing on the 5 minutes. You see that there's traders too that see a fair value gap right there. You see that wick and that wick? If I was just to connect those dots from that low and that high, there's your fair value gap, okay? Wow, this guy just did it live. There's people charging thousands of dollars just to explain this thing, okay? Look at that. The wick of this low and the high of that candle, you see this blue volume here? There's nothing been transacted yet inside there. So this is where orders are being accumulated. Has the volume came back down in here? No. So let's stretch this into the future. We can even set an alert at this red line. If it comes back down there, we will get alerted. Maybe we could possibly buy that. But that's by determining a wick and a wick. If you get that pullback, if this candle opened, ignited, and just took off, you wouldn't be able to figure that fair value gap out, okay? So then you have to utilize the way how I do it, okay? My way of doing it is, regardless if there's wicks or not, or this or that, okay? This eliminates all the bullshit. I'm a person that eliminates bullshit. If I don't want bullshit in my life. I don't want bullshit when I'm trading. Keep it as simple as possible, okay? The only reason I could determine that fair value gap is because I see that wick and that wick. What if that candle opened, bullish, ignited, and just took off? You wouldn't be able to identify that. So the way how I do it and how I taught myself, regardless what the candle is, if it's a big body candle, I'm looking from the opening price to the closing price. That you can determine. I can bring my cut line down to 50%, and I can also find my point of control right there. So that's how I do it, okay? That's the difference between me and all fair value ICT, SMC, ABC traders. Because if you didn't get that wick, there's no way you would have analyzed that. So you can see how we're ahead of the game here. That's what I love to be. I like to be ahead of the game when I'm trading. The further you are ahead, the more analysis, the more information you have over someone else. And that's what trading is. How much knowledge do you have over someone else? Okay, now, did that candle open positive? Yes, it did. Did it come up and take out that high? No. Did it get rejected in the big red box? Yes. Is this bearish candle coming all the way right back down into 50%? Yes. Okay, do we just buy? You can. If you want to buy a pullback, look how much money discount you're saving. If you wanted to buy the high of that candle or this candle up there, you are getting a 33 pip discount right now. So if you want to buy, you can buy in there. Remember, there was buyers that bought up there. They're 30 to 40 pips in drawdown right now. Okay, so if you want a discount, you're buying right at that point of control. However, it's not in a good trading area. Remember what I wanted to see? I want to see something develop up here. Because if I buy this, it could just come up a little bit and go right back down. These sellers, if I wait, could close it below here, that point of control, and continue dropping this down. Okay, we're still in this, this range. Still not a high value area. We were talking about poker. This is like getting dealt a 9-10 suited connector. They're nice. When you look at a 9-10 of diamonds or a 10 jack of diamonds, they're nice. Like you want to see a flop because you could possibly hit a straight. You've got a nice flush draw, but they're not really good hole cards. A 10 jack or a 9-10 suited. I know our eyes like to think that it's a nice setup, but it really isn't. Because anyone holding a queen, king, or ace, anything that comes on that flop, you're behind. So that's like this. You're getting a dealt nice hand, but you got to look at the bigger picture. We're still, not there. But for education purposes, can you see how the green zone is still holding up? So I can explain that there's pending buyers waiting that bought in on discount and they're bringing it right back up. So we are literally barcoding here. Blue, black, blue. This might be one of those Tetris pieces, right? Where it's blue, you got your inside black bar, you open strong. So this bar could technically impulsively break out of here, fill this wick, and come all the way and break today's daily high and trade up to that daily point of interest right there, that 4,080. But we'll see what will transact in that big red zone. Lee, you're absolutely correct. This is how the whole world works. Knowledge applied to a given field. Yeah, any knowledge you have, like, you know, in any field, and you apply it, you're going to do really well in that field. It doesn't have to be in trading. It can be anything that you do in your professional life, right? Knowledge is power. Applied correctly, you can make great decisions. But if it can be used against you too. If you don't use it, if you don't gain knowledge, and you make uninformed decisions and you over leverage, you're possibly going to lose a lot of money. And that's what we see on a daily basis with the majority of retail traders. Is not that you guys are really good at reading candlesticks, I'll give you that, but you guys are lacking a lot in the department of risk management. Okay? Because that's the last thing we're taught as traders is risk management. Right? It's not taught. It's not. Nobody gets any subscribers off of teaching risk management. Nobody gets any love. No one gets any likes. Only like taking a live trade will draw a lot of attention to the channel. Education is left last. Us, we put education number one. Okay, now what do you see? So if you bought, again, I'm sitting on the sidelines. I'm waiting for the dealer to show me something. I see it's coming back up, going back down. It could be building. It could be in a consolidated phase right below this red block, okay? We know that buyers and sellers are still continuing to trade in here. Does that mean that we just got to jump in and go? This is where I'm saying you could trade smaller, feeler trades. If you want to test out to sell the market, go in with a small sell. If you want to test out buying, go in with a small buy. If you get stopped out, okay, small loss, no big deal. You didn't blow up your account. You didn't lose the majority of your percentage that you're risking today. I don't, when I use a feeler trade, I don't even use it towards my risk for the day. If I'm risking 1% of my entire account for a day, if I trade penny sizes and I lose 30 pips or 50 pips on a micro and I lose $3 or $5, that's how much my coffee costs me. It's basically nothing. It's like me donating a coffee to the dealer. You know when you give a tip to the dealer at the casino when you win a nice hand and you give them a $5, $10 chip? That's like a tip. Same with me. I'm trying to get valuable information from the market. If they stop me out, I get my information, I give them a tip. Here's $3, $5, fuck off. That's like what I do. And then I use that information for my next trade where I could possibly turn it into a standard lot or bigger and then return $300, $500, or even $1,000. And they can keep that $3 donation. I like donating to the market makers. I consider it a donation. They can have it. I'll donate it to them. But I promise them I'll hit them later once I figure out the pieces of the puzzle, put it together, and then I feel confident, I know what's going on, then I'll feel confident upping my lot size. Just like you guys, just like in a game. When you got a better edge in a game, you're going to utilize different tactics. That's what trading is. You got to use tactics. I told everybody it's not a cookie cutter approach to trading. I don't use a cookie cutter approach. You got to adapt with how the market is moving. You got to same with a poker game. If you play poker and new players are coming in, like if a player leaves the table and a new player comes in, you have to adapt to that new player. You can't utilize the same type of clues that you're using on another player with that new player. You don't know if he's aggressive. You don't know if he's a tight player. You don't know how he's been trading. You don't know anything about him. You don't even know his name. So trading is the same way. You can't trading is not a cookie cutter approach. You got to learn how to adapt with the markets. That's why reading candlesticks is so valuable, because you can see what's literally going on with the markets and make informed decisions in a live environment. Okay, so you see buyers are bringing it right back up and it's going right back down. So we're just trading right in here too. We're now 25 minutes away from the futures market. So we are coming up to the highest point of the day, the purple line, but we're still failing. Buyers are still failing. Sellers are still there pushing this thing down. So this could, if the sellers continue push it down, could break here, break the trend, break below that block. We make it red, come back, and then we could see futures market selling back down to the lowest point of the day. And then maybe possibly break even lower. But right now I still see some consolidation. If you measure this zone and you want to trade in here, measure the bodies of the candles right now. They're average like this big, 25, 30 pips maximum. Okay, so they're trading rather tight, 20 to 30 pips right now. These things will open up and then we're going to start seeing big 50 pip candles. Okay, it's just the market is, it's consolidating. It's building for the open of futures market. So buyers and sellers are accumulating both. And it's a very difficult situation to determine where it's going to go. Because buyers are building, but they built here, they couldn't break there. They built a second time, they failed there. They're building a third time with a higher low and they failed again. But they're still building it. But sellers are there pushing it down. Sellers are there pushing it down. And sellers are protecting the highest point of the day at the purple line by pushing it down with a lower high, lower high, lower high. Okay, so it's not in a good area to trade. I know some people are going to say, Ron, your channel sucks. I'm going to unsubscribe because you're not taking any trades. That's fine, okay? But I can tell that you're a very impulsive trader and you have no patience to wait, okay? And if I'm going too slow for you, you're more than welcome to leave the channel. There's other live traders right now. Go and learn from them. No problems here. I actually like more when it's more traders that are focused on learning, that I can actually do what I do and actually read the chat and answer your questions. Shay, what about horse shit? Yeah, bullshit and horse shit. I don't know which one is, bullshit is the saying, but I don't know. I've never really seen a bullshit and a horse shit. Which one is bigger? Probably a bull. I've never really looked at the fecal matter of a bull or a horse. That term, bullshit. I don't know, horse shit, bullshit. You guys tell me. Is there any farmers out there? Has anyone been to like a bull run in like Spain? You probably see a lot of bullshit there. Good question. David, great question. What is my A+ setup? Great question. Everyone, pay attention to this. Lee in our group will teach us what an A+ setup is. Lee did some top-down analysis on gold, started with the daily, and Lee saw right over here, this is how he made 500 pips off of this high value area. You see this big bullish candle right here, that double bottom, there's the breakout, okay? Opening balance, targeting, place an alert there. This is an A+ setup. You see how many days, candles it took to come back down? 1, 2, 3, 4, 5, 6. 6 candles. That could have been, if these were 5-minute candles, takes 30 minutes. You had to be patient for 30 minutes. But this was on a daily. So you had to wait 6 whole days to get this A+ setup buy. This is where discipline, patience comes into the market. Now, if you mark this area, let's do it right now. Let's mark this up with a different color line, okay? So I just want to do something here. Show you when it came down here. And then, whoops. Is that what I want to use? Okay. And then we go to the 5 minutes. Okay, so this. So you see right there when it was coming down. Okay, remember what I say. Place an alert at these locations. You can see the big drop. It came back up, rejected, pushed back down, held right there. These are hourly points of interest, zones. Came back up, lower high, sellers broke it right back down. Now it naturally came down there right before like kind of London. So when you're looking at sessions, okay, you can see right there, 225, 230, there's where it tapped in. Right there, broke 4,000. So when you're looking for a good setup, I don't know what you're looking for, but to me, if it comes all the way down to this high value area daily, you see how the 5-minute candles are coming down, you get an alert there. That doesn't mean you have to buy this candle right away. But what you can do is you could have everything mapped out. Like you could look that this was a previous support level, right? You can see that the market is trending down, okay? There's where you get your ping, your alert. You see it wicked off of there, came back up. Look at how it closed, very bullish. Look at that 5-minute candle. How it reacted off of this daily point of interest. High value area, those are what we call high probable setups. Look at it. It closed right at the high with no wick. Opened, small pullback. If I did the same thing on this candle, cut it in half, same shit, a little bit above, a little bit below, finding my point of control. Has it traded back in there? No, it hasn't. Why? That's telling you that there's so much demand up here that it's not even allowing it to pull back. Buyers are asking up here. So there's your clue. A short wick, you got your tap, close above, break of trend line, open right there. That's what I like to take as buys, as a scalper. Right there I'm buying. I'm either placing my stop loss below the green zone. That's a safe stop loss. I could be below that big body. If you really want to give it room to breathe, you could below the daily point of interest or that wick of the candle. That's depending on how much risk to reward you're looking for. But now what we're doing is we're targeting areas, okay? So I would be targeting necklines, like right over here. You can start to see, like right here, if I cut that bearish candle in half, I see it was moving down. See where it came up? Right there. That's where I would have, personally, the way how I trade, taken out maybe 80% and left the rest running while reducing my risk. And I also measure the move. So if I take that move up to there, that whole candle was a 100 pip candle, but if you got it up to its destination, you're looking at over 100 pips. That's on a scalp. And you wait with alerts at these areas. Now, you see the response. What happened after that? It was gone. So you see it closed above there, okay? You could also figure out 50% of that candle. Look at the retest. If you cut that big bullish candle, that momentum in half, you could have got retest buys off of it. Look at 3 times. There was a retest, 50%. Retest right there, 50%. Or another retest right there. You could have literally figured this candle out, 330, cut it in half, did your point of control, add an alert, and it continued to drive. Drive up, and this is where we are right now. Excuse me, guys, I'm losing my voice here. But that's how you find high plus setups. That's what I'm saying. Let's see a high plus setup. What will happen at today's daily high up here? Let's see if we see a clue. Let's see what will happen down here at the lows. Remember yesterday when we were trading, we waited for it to take out the lowest point of the day and we went into that buy right after. And we made an 85 pip move, 50 pip move, and then a following 35 pip move. So it's A plus setups, in my opinion, are where you recognize patterns like maybe a double bottom, double top at these higher time frame locations. That's why a top down is so valuable for a scalper. That's why when scalpers, I see them, they want to learn how to scalp and they just jump right on the 1 minutes and they just go in and start trading here. And I'm like, you don't even know where you're trading. You have no idea what's going on the hourly, where the 4 hours are, what the daily is. You're just, like, I can scalp these candles if you guys want, no problem. I can start to see what they're doing, cut this one, there. But I don't know what the hell's going on. I don't know what's going on yesterday, nothing. I don't have, if I didn't do a top-down analysis, I don't know where my daily points of interest. Maybe I got to wait for these 1 minute candles to come to these areas, and then I see, like, double top then. Like, that's the game. The game of trading is just being patient. I swear to God, I'm telling you guys, once you learn just how to be patient, the market will literally come to you and give you high probable setups. If you just wait. That's why 95% of retail traders fail is because they lack patience. You guys see on these live calls with me, I get on, I can barely say hello to everyone, good afternoon, and you guys are spamming in the chat, are we buying, are we selling, are we buying, are we selling? I have no idea. I have no idea myself until I do an analysis, right? Once you guys figure that out, I'm telling you, the game will completely reverse for you. It will completely change. I'm not saying you're going to become a millionaire, but I'm saying you're going to really improve on your trading. Your journaling will look a lot better. You're going to see your setups you're getting more confident with taking nice high probable setups. See, if you're still trading in the zone, you're getting stressed out in here. I'm not. You are. If you're buying, you're getting stressed out on these bearish candles. If you're selling, you're getting stressed out on these big bullish candles coming up. If you're not getting stressed out, then you're trading in here, but you're trading with good risk management. Then I apologize. But for those traders that are getting frustrated in here, and if you are, you're over leveraged. You shouldn't be frustrated in a small zone like this, a 30 pip zone. But you see the sellers are still pushing this thing down. So these are kind of clues I look for. See that small wick? See how that candle opened? How did it not even fill that wick and then to make a new higher high? Sellers brought it right back down. Now they're bringing it down right through the green zone. Okay, so you can see sellers are still strong, protecting the highest point of the day right now. So this is where literally we are in this channel where we might physically watch the channel break right now. and we're 15 minutes away from the futures market open, okay? So if anyone in the chat can list, have you guys learned on anything on today's call? I'll go over, we went over Forex Factory news, we went over earnings, we talked about some stuff in the markets, we did a blog on our right here on relating poker to trading, right? Maybe you learned something there. And then we came into the charts. We did a top-down analysis. Maybe you learned something there. And David asked for a high probable setup. High probable setups happen, but you got to be patient to wait for them. Ramji, am I a full-time trader? Yes, I'm here every single day with you guys. That should literally tell you I'm here full-time with you guys. On YouTube, I've been here 6 days, every single day with you guys. Go on YouTube. There's every single live session is posted live. Nothing is deleted unless YouTube deletes it. And you'll see from 2020, all sessions, all securities, same strategies, same shit, same talk, same person. And it's all live. So you see losses, you see wins, you see break-evens, you see everything. Full transparency. I just don't show my account. Okay, that's for privacy. I don't even show my wife my account, let alone show strangers my trading account. Don't let her hear that, please. Please, guys. Or else then you won't see Ron on here any longer. No, I'm just joking. Trading, your account should be private. Only you and your accountant should know that. Don't even tell your wife. Wink, wink. to all the men out there. or else she will liquidate you. My wife is my market maker. Okay, there's another lesson for all the fellas out there. Don't disclose your trading account with your wife. I'm just joking. I'm joking, guys. See, I joke too. Entertainment and education. Fuck, I'm going to get a lot of guys in trouble tonight. Yeah, we lose the compounding effect that way. Because, yeah, if she sees me scaling up the account, she's going to say she needs a purse. I'm going to say, no, it's not purse time right now. I got to keep compounding my account because it's a game of percentages. That's what I keep telling my wife. We'll hold off on the purse right now. Maybe the purse will turn into a bigger reward later. Let me keep compounding. She asked me, are you still compounding? I said, I'm struggling right now. It's consolidating. I'm in a consolidated phase. And then she leaves me alone. Okay, but let's focus here. We've got a bearish break. So did that zone hold up? It did for 1 bar, 2 bars, 3 bars. You see how many times it came in there? But the buyers could not advance, right? So sellers accumulated. They have the momentum. We're closing in 50 seconds. It might physically close below the green zone. So what we're going to do is go from green to red zone. And then we're going to look, we're breaking the actual trend as well. Guys, I'm losing my voice. You guys can probably hear the cracking in my voice. I do talk a lot on these live calls, and after a couple days, after a couple weeks, it starts adding up. Hopefully you guys can still understand what I'm saying. Okay, so we're going to go through the motions. We see that consolidated, we didn't trade into into that red zone. So you still see sellers are there holding it down. This body's closing. I'm going to assume it's going to close below this green zone. So the zone is not changing. The color is changing. The size of it didn't change. So what I'm looking for is if the buyers come back in, whether it's this candle, the next candle, or 20 minutes from now, if it comes back in here, I want to see if the sellers will reject it and push it back down. Then that's where I could sell at a premium area, at a high interest area, right? It's not as high as this highest point of the day, but this is representing this inverted block right now. So you see how the candle opened blue and now it's it didn't come up. Now it's going back down. So this is where you might want to engage in a sell right now. But you got to understand that the trade has not came back to retest this area, okay? So you got to factor that in. So if you're taking the trade right now, your stop loss should at least be above here, okay? If that's too much for you to risk, then don't take the trade right now. Then you got to physically wait for a retest. And that's what traders can't wait on, because they see this big candle and then they got to go in, okay? I know, believe me, I'm a scalper too, and I'm missing out on that candle as well. But sometimes if the trade goes without you, you got to wait. You got to continue to wait for that setup. Now it's coming back up, okay? So all of those sellers that sold now, did they do anything? Did they pip and dip? Probably not. They're probably not scalpers. So it's coming right back up. So they're forced in a little bit of drawdown. But if it comes up here, that's what I want to see. The ultimate retest of this location. Will it come up now, 5 minutes from now? Maybe futures market open? I don't know. Maybe buyers will bring it back up and close above here and then do this, okay? But that's going to be a zone of interest going forward. And then you see we're right there, that purple line, that's the lowest point of the day right there, okay? So we're not too far from the lowest point of the day. That's a nice scalp candle, single bar scalp. Like when it opened blue and broke, if you took it, that's what I look for. When I'm scalping 15, 20 pips, I'm in and out of that candle. If you look at it on the 1 minutes, you can see like the 1 minutes, how they're developing, okay? But I know it's too fast to do it on these calls. That's why I kind of refrain from doing it on here. Have you guys even looked at your spreads? Have you guys even seen what's going on in the markets right now? You have to. It's part of your job. Okay, my spreads are one pip right now. 10 points. I like trading when it's 0.4, like 4 points. Tim, keep in mind the 4-hour bullish candle. It's still got that bullish body, but there's a massive rejection coming down. This is all that's holding it, Tim. So as soon as maybe they flip that opening balance right there, 4,067, could take out that wick and drive down to that lowest point of the day. So we'll see right now if the 4-hour candle can keep building its way back up. Tim, keep this eye right here. Body 4-hour candle close, body 4-hour candle open, 4,072 and 50 cents as interest on the 4-hour, okay? And we're 6-7 minutes away from the futures market open. So if you guys can leave us a like, we appreciate it. Again, subscribe to the channel if you guys are having fun with us. Thank you guys. We hit 88,500, where that's a nice psychological number. Perfect, guys. So we're almost at 89,000. Amazing. Okay, guys. So you see how it came down, came down, came down. Okay, relative to this wick, this wick, this wick. So there is like some 5-minute support showing right around here. Okay, this 4,067.68 area. Now look at it, they came all the way back up and flipped the candle blue. So it might in fact come up to get that retest on the next bar, okay? Then we'll determine, can we sell at a premium up there? But we also have to factor in that big return on that candle, because those buyers could come up there and it could break right through here. So we got to watch, guys. And we're about 5 minutes away from the futures market, and that's when volatility is going to come in. That's a nasty pullback, Dustin. You're absolutely correct. But it was a nice sell candle. Like if you sold that, this is what I mean. Like you got to kind of learn how to 40 pips. Guys, you know, some traders trade for 40, 50, 100 pips a day and daily goals. That candle is like halfway towards their daily goal if they just opened and closed it and didn't worry about, could it have broke the lowest point of the day and went further down? Nothing. Just being in that candle and getting out. That's how I trade. I'm like a candle to candle trader, an individual candle trader. So I make all my decisions based off of that individual candle. Okay, so now look at closed right there. This is kind of clues. Like it came all the way back up with that return, and it closed with a little tiny bit of blue volume, and the candle just opened flash blue, and they're driving it right back down. But this has a big wick. Okay, this is not a small wick. So these sellers have to continue to sell all down this rejected wick in order to break it and cause a new low. So this will possibly find some buyers who rejected this move coming up, they should be coming in anytime now, finding a wick to pull this thing back up. But if this is real black selling volume and there's no buyers, then this is showing you how strong the sellers really are. Okay? So again, if we're not in a trade, we're accumulating information. Okay, look at that. They just filled that wick like it was nothing. They filled it and they also created a new low. So when you create new lows, there's always going to be dip buyers buying it right back up. Okay, so do we trade this candle? I don't know, not yet. Okay, have we retested this red zone? No. Are we very close to the lowest point of the day? Yes. Do we have futures market open up in 3.5 minutes? Yes. Can we continue to just watch what's going on? Sure. Maybe some of you guys are already in a sell. Congrats. Okay, some of you guys were maybe buying and you're in trouble. Then you gotta know when that candle was breaking. Sometimes you gotta know to close your hand. When you know you don't have a winning hand anymore, just like poker analogy, when you know that you don't have a winning hand anymore, there's no point in putting more money in the markets and seeing other cards because you know you're behind. You got to give it up to your opponents, right? So you got a lot to learn, guys. There's going to be trades you take, and then you're going to be second guessing your analysis. You're going to say, oh man, I don't know why I took that. Maybe I made a mistake. Then get out of the trade. Even if you take a loss, at least take a loss, but you can not lose as much. You're still preserving capital so you can take another trade and recover that. That's another thing I find that a lot of traders these days are having difficulty doing, is admitting that you're not in a good setup, but you can't close the trade because you can't realize a loss until it officially hits your stop loss. I don't trade like that, guys. So that's not part of my trading strategy. So I can't teach you. I can teach you what I do, but I don't trade like that. Okay. You saw yesterday when I was in a trade, out in drawdown, came back up in profit, then close to the market opening, I exited the trade. Then it ended up going in my direction, but I don't worry about the woulda, shoulda, couldas. I made a decision at that time and place. And I can't go back in history and say, oh man, I should have done that, could have done that. No, that's not trading. You make a decision right now and you live with it. You live with the consequences, good, bad, or ugly. But you have to review it and understand why you did it. Okay? So if you were in buys up here, you saw it didn't make any new highs. You see it's coming down, and then that was the impulsive candle that closed below. Like that right there was your telling candle. You didn't have to continue. You could have been out of this buy, like, unless you want to realize more losses. That's up to you again. That's something that you will learn. Okay, now we're 1 minute away from the futures market open. We've created lower highs from the highest point of the day. This red block is still intact. There's that double top still holding. So they've lowered the offers. You see, we haven't traded into this red block, so the offers are being lowered right here. We're below this red block now, and we're continuing to push down. So do the sellers have enough volume to take out this lowest point of the day right here? We still have not retested this zone yet. Okay, so I'm just going to get rid of this arrow so we can watch what's going on here. Oh, sorry guys, I didn't even have the daily bar on the chart. Here it is. The daily bar, our opening price, the lowest point of the day, there's the highest point of the day, and we're coming down. So we still have our opening balance, still holding, like right over here. This was today's opening balance. Okay, EMA is 9. Is this green line? We are below it, and the EMA 200 is right here. Here's the EMA 200 at 4,060, below the lowest point of the day. Here's the close. Again, getting my cut line. Cut that candle in half. Volume, easy cut. 4,070, it's at that psychological level. We just opened blue, came up lower high, didn't touch into there, could be pushing down to fill these wicks. But we got now 1 wick, 2 wick, 3 wick, 4 wick, 5 wicks in this area. So if I just kind of trap in this area right here and make it green, resembling those 4 wicks behind, this is where I should see some short-term buyers stepping in right now to prevent it from breaking this lowest point of the day. There they are, okay? So 1 wick, 2 wick, 3 wicks, 4 wicks, 5 wicks, 6 wicks. This zone, you see how I just made it, is still holding. So if the buyers here are protecting this opening balance, we have to see them come in here now, okay? They were there. They pushed it right back up. But we still see the selling pressure is offering to them and continuing to push black volume down. So it's still showing the strength of sellers right now. So you can't be like kind of buying right now with the still selling pressure coming down. If you are buying, I would go small sizing. Test out a buy small, because these sellers could continue. There they go. They've engulfed them. They could create a new low, and then we're coming down to target right there. You see how the daily candle opening balance flipped? So you see how strong the sellers are. Okay? So they really penetrated through that zone. And now, let's see if we find buyers at the purple line, at the lowest point of the day, or they're going to take it out. If we see a reverse flip, we could buy off of this green zone to take it back up. There they are. Okay? So a good wick there at that hourly white line. Okay? The consolidated area. There's the wick return. We're trading right back in that zone. Okay? So as we came down there, this zone was getting populated with offers and buy limits and sell limits and all of that. It's still transacting, and we have 3 more minutes to go. Okay? So you see how the daily bar is still building? Okay, that's a good return. But you see how it came down deeper and then coming back up? But look, it's still a black head of volume. They have not flipped it blue, so it's still... We're gathering information. We're gathering information. I'm looking at my spreads. My spread is 1.6 right now. That's pretty high. Okay, and look at the sellers continuing to push down. If they close it below this block, that zone is going to turn red, and it could cause further pressure to continue selling off. Yeah, the purple line is the daily low right there. Sorry, guys. I just was marking up that wick right there at 420. Okay, so now we have 2 more minutes. So this is the halftime show of this candle. It's a 5-minute candle. 2.5 minutes have expired. We got 2.5 minutes to go. It opened positive. Sellers were there. They pushed it down. Then it got a wick. Remember, it returned back up. Then the sellers pushed it all the way down to the lowest point of the day. Then it came back up strong. And then now the sellers are pushing it right back down with less than 1:30 to close. So sellers are still in control. If you're trying to buy, you got to understand that you're buying against selling pressure right now. Have we retested this location? No. Have we retested 50% of this candle? No. Okay? So we still can sell at premium areas if it does come up. But right now, look, they took out the lowest point of the day. Now we got to watch, are they going to spike some liquidity down here? Are they really going to bleed it out? Is it going to come back up and retest this block? We could be selling off this block. Okay, so this could be a sweep. You're absolutely correct. But we got to wait and see, right? So that low, equal bottom low so far. That was the wick of 420. 420. Okay, there it is. Equal bottom low, but they did sweep the low, came down a little further, but got a wick. And then you can see where a lot of buyers were coming in. They came in here. They came in there. So are they going to come in again here? Or is it going to break down further and then bigger buys will be down in here? And it will further bleed out on sell side. Here's the close in 20 seconds. You see you got a question? Go for it. Hurry up before this candle closes. Okay, look at that. Good return, equal bottom lows, volume back above. Here's the close. We're right back into this trading block. Okay, so it did close below. So I'm just going with that block, red, just for now, to show that the buyers did not close inside here or above. So it's still red. Candle opened bearish and continuing to push down. So we either can sell now, but we got to know we're selling at like kind of the lowest point of the day. It would be better, in my opinion, to wait for maybe a sell here, a sell there, or maybe a sell here. Like then we can take it maybe back down further with more sellers. If you want to go in on a sell now, to me it's kind of risky, just because we're at the lowest point of the day. but it could really, you know, sell off right now. I'm just waiting, okay? Just waiting to see. We haven't really had a decent pullback yet. Okay, after now what we see, what's your analysis? Are you guys on sidelines still? Are you guys going to go look for sells? Are you guys looking for buys? What's everyone's bias right now? It's going to be mixed for everybody. Sellers are strong. Absolutely. Sellers are strong. Yes, they're winning the market. And you could tell up there, the clues kind of how they're pushing it down. So in my opinion, I've missed the sell there. I missed the sell there. I missed the sell there. I missed the sell there. So do I want to sell the lowest? No. I'm trying to wait for sell at a premium area. I want it to come back up here. I want to sell here. I want to sell here. I want to sell here. It hasn't came to me. That doesn't mean I got to force a trade now at the lowest point and just FOMO missing out. The trade is gone. It's gone. So I got to wait for to sell here, or sell here, or sell here. Okay? RSI is still not even oversold, okay? So it's not even oversold with this really silly indicator. This thing has still room to go down, okay? That's why if it pulls back up, I want to sell maybe at these zones. And that's that 200 EMA. Some of you guys respect that line down there. Again, just this is an important area here too. 50% of this candle caught that wick and that wick. There it just broke below. See if that volume can come back and close above there. That could cause like a little bit of a blue leg, but maybe we can sell it back down. And remember, if you're looking for buys, I could be looking for buys as well. But deeper buys down here would be better. 4,058, 4,055 inside here. This is more of a daily buyer zone. There's my daily point of interest, my yellow line. So when we were talking about looking for A+ setups, if these sellers bring it all the way down to there, that would be like an A+ setup zone to look for buys. And then if we see our pattern, then it's go time. If we're looking for buys, we're looking for buys inside this green zone. If we're looking for sells, we're looking for sells at premium areas, okay? You guys got to follow with me, okay? And if you're just looking to trade this candle, then you're just scalping. Then you should be just trading individual candles. But if you're waiting for a bigger move, let's see what will happen down here, and let's see what will happen up here. How many trades do I take per stream? It doesn't matter. I'm a freestyle trader. 1 trade, 2 trades, 3 trades, 5 trades, 10 trades, whatever the market offers. I can scalp every single candle if you guys want, but sometimes it's too fast for you guys. So I'm slowing things down just a little tad here. Because sometimes I get in trades, I'm up 50 pips and I'm still holding, you know, to try and explain concepts, and then I leave too much money on the table. So we got to look for high quality setups on these streams. Not because a lot of you guys don't understand, just to get in and out, pip and dip out of one candle. So it's hard to explain live. Okay, so that candle closed. Can I cut it? Yeah, I can. I can cut it in half right there. Can I find the point of control of that candle? Absolutely I can. Okay, I can still go through my motions, open, close. That was a big candle. I can find the point of control of that candle. And if the sellers still manage to keep it below this zone, you can tell how it could still stay consolidated down to low side and they could continue to push it down, okay? So let's see now if it can actually build a little bit. Those wicks now are kind of equal to a higher low, So we got some bullish volume coming in, but again, this could just be the first blue candle that kind of comes up and then they reject it back down. So this could be one of those like dead cat bounces, right? So right now, maybe we could see a little bit of consolidation, a little bit of building, but you see, this wasn't like a big blue candle that just came right back up with a lot of volume, okay? So it's not really moving yet. It's blue, showing buyers, but hasn't even traded into the point of control of that previous bearish candle. That wick is still a lower high. So you see the sellers maybe sense weakness, give them some more offers, can come down and bully this candle back down. Okay, so let's just kind of recap what has happened. Kind of traded at the highest point of the day right there around 7:30. See it built down, closed below right there. So I know I didn't trade it, but it's good for learning purposes. See how it broke that kind of trend we were in, that parallel channel, closed below. I was waiting to sell right there, like if it would come up right there. It didn't. So you see it kind of missed out on that trade. But now I could either be buying the bottom down here or I could continue to sell down. Now it's coming in to test that zone. So this is what we got to see now. We got to see, will it get rejected right here, or will this blue candle be able to come right through here, close above this, and invert it for one more leg going back up? There's the first retest. So it's got rejected. Okay. So now you see, got rejected, coming down. Buyers could be bringing it right back up. Will it still continue to hold that wick? Is this thing going to continue to push down? Will it refuel itself back up? 2.5 minutes to go. Half the candle is expired. We got the second half coming in now. So you see it's back up bullish, coming back up, testing its wick again right below the block. So next push, we'll trade right into 50% of that point of control. One more push will be at the top. If this blue candle closes above this, I'm flipping the zone green, and then we could start to maybe invert a zone to maybe see where buyers are maybe building something, but sellers are still there pushing this down. So this could close consolidated down here, and the next bar could be black, continuing to push down. And then we could continue maybe selling with this selling trend, but we're selling down here. I would like to sell higher at more of a premium area, but the buyers are not bringing it up here. So we got to work with what we got so far. We got to work with this zone. So again, it's a big bullish candle coming right back up. Closing in now, 1 minute, 20 seconds. You entered a buy now, Phil? Okay, so let's see if it will continue to build here. See how it's still see how the buyers are still struggling to trade into this point of control. Okay, so we got to see the buyers push it through this. And sellers are, for the sellers are still here. They're still holding this down. And our daily candle is now a bearish pin bar. Okay, now we got 30 seconds to go. So we should be watching what's going on now. Where will this candle physically close? This could be like a Tetris piece. Black, inside blue bar. Next bar could open black, come down bearish, break those equal lows, break that 200 EMA, and travel down to the green zone. Okay, so if you're looking for buys, deeper buys are in there. But if you want to continue selling, we got to watch next bar. Here's the close. Right at 50%, they opened the ignited blue. So ignited blue with a short wick looks like it's going to pop. There's the pop. How much higher can it drive up to? Okay, there's the big rejection right now. Okay, so they rejected it, but you see how that was a short wick. The next candle opened blue, ignited, and had that fill. Okay, so now it's continuing to fill. Big, massive rejection right there. Okay, so if this thing starts to come down, it could start to have that bearish leg coming back down. Okay, so you see where the fight is happening inside the point of control of that previous black candle. Okay, it's coming back up. They're pushing it back down. Okay, and all of this is happening in this point of control area. So it's trading right in this location. Okay. Okay, there was the break. Now I want to see if it will come back up to me. Now this is where it's barcoding. Black, blue, black. This was that Tetris piece I was talking about. That's where it failed and now continue to push down. But as it comes down, it's got a return wick coming back up. Okay, so now we'll see at the opening balance. See, it's a big spin top now. Okay, so these are those tough candles to trade. Look at how it came up blue, came back down black, came back up, and it was right back at that opening price. So this is like a coin flip candle. This is very difficult to trade this one unless you're going with the overall structure, which is still showing sellers are still in control. Okay? So you see it came down, back up, coming down, back up. Where will this bar close? Lots of time still left on it, 3 minutes. Wow, sellers are tough. Okay, so you see that, how it opened bullish, that clue where it came up and then they just slammed it down? That was like a FU situation. That was like, you know, what we always talk about, a fishy situation up there. You know, but look at how this red zone, okay, all of that happened in that red zone. Okay, there's that Tetris piece. Black inside blue and then black. Now what that has to do is got to run through these wicks. Got to continue to fill those and break for the new low. But right now it's still holding. It hasn't broke those yet. And then the volume, if you look at the volume, it's got more volume in the candles, but it's still consolidating. It's still trading sideways. Sellers, buyers, sellers, okay? It's bigger if we measure the actual size of the candles. They're 30 pips right now, okay? So we're breaking for that 200 EMA. There's a new low. And then if we want to buy, like I said, deeper buys are good here. 4,058, the top of the green box. Better would be right in 4,055. But look at that big return wick. Now they spiked it down to that 200 EMA. Big wick returning back up. Same red zone. Where will it close? We'll figure it out in 60 seconds. Okay? So buyers are accumulating, but sellers are still selling. You gotta still understand that. Okay, but at least that 200 EMA has been tapped and got respected. Now, can they flip the candle back up blue? A blue bullish pin bar, maybe hammer, close it above here. Then we might see some buying going into the close. Here's the close in 40 seconds. Solid return on that candle. That was a big black candle, and they returned it. This might be our first blue candle closing above this point of control. We could look for a pullback into it. Okay, this might be like a fake out candle closing above here, but let's see the close. So it's very strong, coming right back up to 4,066. That was the previous low of the day. Big return, solid volume. The daily candle just flipped back to the opening position right here. So this is the big fight now. Holy, okay. So this zone is respected. Now let's play in here. Okay, here's the close. This is going green. Okay, now we're starting to see the neckline build. See the range now? This big bullish, bearish move coming down, big bullish move coming back up. So if it retests in here, we buy the higher low, double bottom there. If it breaks out of here, could retest this, continue to go higher, or if it closes below here, we could sell it down to come back down here. Okay, so guys, now we really got to get ready. Okay, if you're already in a buy, fantastic. If you were in a sell and you didn't do anything down there, I don't know what else to say. Like, you got to be, you know, closing some trades sometime. Okay, these are volatile markets. Okay, but now we see, at least you guys see some structure being developed. Now at least we can see a leg come down in the first leg, V recovery return. Okay, so at least even if we're not in trade, at least we're determining where the neckline will be. At least we can determine maybe where to buy a pullback right there or there. Maybe we can sell. If we're selling, we know where the buyers could be. Then we sell into them and close our position because they could buy it right back from us, right? And if I'm trading from here, I could trade to my next zone. So at least we're starting to see a little more development now. And you can see now the volume base in the candles getting a little larger. We're getting more volume in the candles. Therefore, you got to really watch your risk. Okay, so they impulsively broke it out of there. Got rejected back down. Holy, I'm really losing my voice. I can barely talk. I might have to do sign language with you guys. Anyone understand sign language? You'll know when I do an FU candle. You'll know that sign language. Should be universal. I'm not giving you the middle finger, but I'm telling you, it's an FU candle. Okay, so that's a big rejection, right? Okay, so now it could come down. Okay, so if you were buying, did you do anything in that red zone? Like, guys, just like look, if you bought and you came up there 60, 70, 80 pips, you traded into the bigger red zone. You got to acknowledge that there's bigger sellers there, right? So that's kind of where you can learn how to close in profit. You don't have to close your whole trade. You can close partials, leave the rest running. Same with when you're selling. You got to know when you're coming down to like a 200 EMA, close to a daily demand zone, that there could be buyers. If you're selling that, you're up 20 pips, 50 pips, 100 pips. Got to realize maybe something, okay? Now you see the daily candle? We're right back fighting at the opening balance. Okay, so this is where the neckline is. So we might cool off here, might have another leg to come down, or it might have one more leg to build back up. Here's the close in 2 minutes. I hope I can get into one trade before the end of this call. Maybe I'm going to trade this neckline. So you see now the sellers are coming back down. Remember this zone that we inverted, okay? This is an inside block, okay? It's not as relevant as down in here. This one is much better. Why? Because it's representing the lowest point of the day. This is still up here. This is an inside block, not as probable as this one down here. So we'll just keep that red line for reference if it comes down there. Now I'm starting to see more of the zones. Okay, and here's the close in 40 seconds. And you can see that there's volatility, okay? So if you're trading, you got to understand stop loss. You might have to increase your stop loss a little bit, so you've got to decrease your position size to make up for that. If you think that you're going to trade in here and realize zero drawdown, it's not easy. Here's the close. So sellers, remember that was a strong bull candle, rejected it back down, closing below here. Next candle could start a lag coming back down. Okay, get ready. Here's the close. So close below that purple lowest point of the day again. It's blue, ignited. They might reject it back down quickly. This is where I would want to see a quick rejection below 50% of this bearish candle because it's still holding its ignited open. So it's still holding. So it could continue to build and break out of here. Okay, so it's still holding, it's still holding, it's still holding. It's refueling itself now. This is the flag. So it could be a bull flag ready to possibly break out to fill that upper wick. It's not a short wick to fill. It's rather long wick to fill. Okay, and this is the neckline. This is where the 9 EMA is, the red zone is, the opening balance. There's a lot going on up here. So this will really determine if the buyers are strong today, like right now, or if the sellers are still here. Okay, this is where a lot of action, a lot of transactions are going to take place. If we got to wait another candle, we got to wait it out. It's going to be 8:30, big 30-minute candle opening in 5 minutes. Maybe we wait it out. This was the first 30 minutes, how bearish it was when the futures market opened up. And then like the last little bit has been all buyers bringing it right back up. So even if we look at the 30-minute candle, we maybe got to wait 3 more minutes, and then we could see maybe 30-minute candle coming up bullish, or another 30-minute candle coming down, filling this back, filling this wick. So I'm waiting for close. This is neutral consolidation in a bull flag below this red zone. Daily candle doesn't have like big volume, still like a indecision candle. The daily candle could come down again, or it could start to build its way back up. Remember, sometimes trading is gathering information. You got to gather information, formulate like a hypothesis before you even take a trade. I know everyone's saying, Ron, why didn't we trade this candle, trade that candle, that? Because I was waiting for pullbacks and I never got it. And I never engaged in continuing to trade near the lows. So I was waiting. I told you guys, I want to sell there. I want to sell there. I want to sell there. The market never came back to me to sell. So I was looking to buy as well, but it didn't really come back to my location after that big move. I was looking for it to come back down. It didn't. Okay. So should I just be forced to now just trade because I'm missing out? No, you got to learn that, guys. Okay. That was one of the biggest mistakes, is just now FOMO trading because you feel like you missed out. I keep telling myself there's always going to be another setup. There's always going to be another setup. There's always going to be another setup. That's what keeps me staying patient, is to understand that there's going to be another setup. Okay? But we still got to gather information. Those buyers brought it right through there. They couldn't take out that high. Again, they're getting rejected back down. We have closing in 90 seconds, and a new 30-minute bar is going to open. The real move hasn't showed itself yet? Possibly. You're correct about that. You're absolutely correct about that. Maybe the real move hasn't been shown yet. You're absolutely correct. But if I want to go with the trend, like I see here it got rejected, there it got rejected, there's a lower high, they broke right there, the lows, it came back up. Maybe it's selling back down to see if it will take this out and drive back down lower. Maybe bearish. Unless these buyers can close it up above here, we could push to test back up at 4,075, back up here. But it's going to be interesting how this closes in the next 30 seconds right now. And here's the close, and we got a new 30-minute candle opening. So you see that blue volume did not close above there. We're still in this kind of neutral area consolidating. Closed right below the red zone, so sellers could bring this thing right back down. However, got a quick little retest wick, and it could be pushing down now at 30 minutes. Okay, I'm going to go in a sell. I'm going to go in with the 30-minute sellers, see if momentum can continue to push down. I'm in a sell. I'm just going to place my stop loss. I could go right above 50% of that 5-minute candle. I could increase it to be above the point of interest of that candle. If I'm going to go more risk, I want more reward. I want to see if we can come back down into this green zone and possibly break to come down into there. Okay, so I'm going in a sell based off of this rejection wick, closing volume below the red zone, new 30-minute candle to see if the 30-minute sellers can continue to push this bullish leg back down. So it can create kind of this pattern where this is pattern B. I'm hoping that this is kind of the neckline here and not higher up here. And then they can continue to advance it down there and break it down for move C, right? If we're continuing to go with selling pressure. But we still have this opening day balance still holding, okay? So my stop loss is up here. I don't know if I'll still be on the call with you guys. I have about 10 more minutes left on the call, but we'll see what happens here. So I'm trying to sell with this momentum to come down with this leg. If I was to measure that entire leg with the Fibonacci from like kind of where the seller stepped in here to the lowest point, I can see that 50% is right there of the leg. And then there's the 382. So I got my stop loss above the point of control of this entire bearish leg. Okay. Man, I'm losing my voice, guys. So hard to talk and do this. My stop is right above this body right here of this wick. Okay. That's my stop loss. Okay, so it came into a little bit of drawdown, but we're still below 50% of that candle. That's a solid rejection. Okay, but now we got to continue to push it down and take out this purple line and get black volume closing back below here. Even if we close in this consolidated zone, I'll accept it. But then we're barcoding. Blue, black. And then maybe we could really redistribute. Maybe that's the candle rejection that we need to cause the leg to come down. Okay? But we got to close strong. See, the buyers are still here at the opening balance. Like the sellers are not closing it below here or pushing it down with conviction right now. So if you keep lingering around there, you're going to allow more buyers to enter. You've got to have like a statement candle to push this thing down, really bid down in here. Force these buyers to think about their stop losses down in here. Just like I was forced to think about my stop loss up there. Okay, that's a good candle. Let's see if we can now close below all of this structure so we could continue to advance on the next bar. So we got our bearish daily candle flipped. That's what we want. We are in the money. It's about 20 pips down here, but we're targeting maybe about 50 down into there. Okay, and we're closing in 90 seconds. So those are solid rejections we got up there. If you want to reduce your risk, you're welcome to. You can bring your stop loss now down as low as you want. You can even go to a break even if you like. But if we're waiting for this body to close, let's wait it out 60 more seconds. Wow, good push down, okay? It's a great push. If you're just looking for like a single bar scalp, that's 32 pips right there. That's normally, guys, you know, maybe I can trail this thing. Let's see. Fuck, I hope I'm not making another mistake tonight. So we sold at a premium area. We sold where the bigger sellers are, and we're in the money. Okay, so that's 35 pips. You guys please control your risk. I'm not your financial advisor here. $37. Okay, so let's see where it's going to close now. Here's the close. I'd like to see if we can close back below this zone right here, this purple line. Because that could be the cut line, that could be the retest line if it comes back up. Okay, close. Bearish igniting candle open. So let's see if it can hold black, black, black. It's still holding black, perfect. Can we continue to fill that wick? It's still holding ignited bearish, perfect. We got our continuation bar. Let's see if we can break these lows. Oh, I don't want to see twister bottom lows. Yeah, they are equal bottom lows, so they're bringing it right back up to the opening position. We're still holding black. It's still black, 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 still holding. I'm going to lose my voice. There it just flipped blue. So now it's coming to the actual cut of the candle. 50% cut is right here. So can we hold it down? This is where the point of control of the candle is. So this is where we should see sellers step in. But we're in this barcoding range where it's blue, black, blue, playing this ping pong game in here. Okay, so there's the rejection at the point of control. Can we kind of offer again to drive this blue volume down, or the buyer's going to bring it back up? So that's good rejection. Here's the battling area. That trade moved down 40 pips. Did anybody do anything? Did you at least reduce your risk? Did you guys scale out, or are you guys still holding? Okay, we got a good rejection at the point of control. Our bearish head didn't hold up. It did, but it couldn't break the low. That's what equal bottom lows are. So then the buyers are bringing it right back up. Now we got to test our point of control. It's failing right now. So then it's going to come maybe a little higher into the big body of the candle. Okay, we still have the daily candle on our side with this little bit of black volume. So this is my entry point now. So it's at a break even right now. DJ Travel Media, you took 40 pips and closed in profit. Excellent. Good for you. Congratulations. Okay, so we're right back at entry. We're right back in the consolidated zone. We are still below this red zone. Okay, so we're kind of barcoding. Blue, black, coming back up blue. Are we gonna push back down? Closing in 2.5 minutes. Good rejection. Okay, so let's continue to follow this. Those are equal bottom lows. That's what I'm saying. Those are nasty. Okay, you see how that killed our momentum right there? At 4,063 and 34 cents. Those equal bottom lows. That's what's sustaining the market from breaking down further. That's what caused us to not realize all of our profit into this green box. But when it came back up, lower high, sellers are there pushing it right back down. Remember this bar, read it from the beginning. It was a bearish ignited bar. It was holding. Then it came back up. It held the first initial push at 50%, went back down. Then it came back up. But you see right there, my entry point is exactly where the sellers are holding it down again. Now pushing it down. So can we flip the candle back down? Now, with all of this momentum, with all of that volume, with all of that offerings, we should technically be able to take out this equal bottom low and create a new low in the market. If we can't, then you can see how the market is literally holding that position. Then the next bar could be blue coming back up. So this is when we should be breaking for a new low and maybe drip down into this green box and hopefully realize 50, 60 pips of profit down in there. Then we should be reducing our risk if we haven't already. Okay, but you see again, they could not break that. It's interesting. There's the break. Okay, finally, thank God. So we did create that new low. We got to create new lows in order to continue to push down. There, boom. That's the redistribution. Okay, so get ready, guys, because it could get really volatile now going into close. I'm losing my voice. Hit the likes on YouTube if you like Ron trading live with no voice. Guys, that's excellent move. 50 pips. I'm going to a break even now. Break even time. So you see where if I went to a break even, they would have got me. Fuck you to the market makers. Ron and the snipers say fuck you. Everyone with me. Let's all say fuck you to the market makers. They try. You see the game? If I went too early to a break even, they would have tagged me right there. And Ron would have smashed the computer. Okay? And look at now. Now we're running this shit. 60 pips. I'm going to take out 80% down there. Okay? I'm taking out 80%. Fuck you to the market makers, and let's keep 20% running. Okay? There we go, guys. Hit the likes on YouTube, please. Subscribe to the channel if you guys are crazy with us and you guys want to have some fun. So, full recap, guys. I recapped that entire trade for you guys. And it came into the green block, red to green block, perfect. Close out 80%, I got 20% running with a break even. That's how you control your risk. That's how you wait, okay? You know, in a poker game, you wait. We were dealt with some hands. They were nice, but we waited for pocket aces up there. We got our pocket aces, and we returned it all the way back down to a zone We still respect the buyers down here, and we get our pips and we get out. That's it. It's not my mic. It's my voice. I'm losing my voice, guys. I got to go have a hot tea right now. Okay, and then if the runner wants to continue to run, God bless the runner. Hopefully the runner can continue to move, but we still got to respect that the buyers could come all the way back up. So we don't want to give away all of our profit, okay? Any questions on that trade? So we waited, we gathered information, and we pulled the trigger, and it worked out for us. Yeah, that's it, Lee. Patiently wait, look for the center. Remember what I was saying? The ABC, that A, Lee, coming back up right there. Wick, wick, wick. I entered on that third bar. See, wick, not wick, Lee, if I went quickly to a break even, you see right there, they would have got me. So I left it open. And then as soon as that candle started, when we broke those equal bottom lows, that was the redistribution. Then stop loss to break even while taking out 80%. But lessons for everybody. Lessons for me too. If I went to a break even, man, again, I would have been tagged on the next candle. So I kept it open just a little longer. Okay. And then we came back up. Here's this move. So can we follow this area? A, B, C pattern. A, B, C. We just got to break this block down here, get it below that 200 EMA, flip this block red, and we can continue to break down. And this is where the bigger buyers are, okay? The bigger buyers, the daily buyers, daily point of interest, 4,055, right in there. I don't know if it will come on our call because I'm finishing up right now, but later for you guys. Okay, guys, so you see, you got to let the market gather information. We found one bottom, we found the neckline, found maybe this could be the second bottom here, one bottom, two bottoms. It could come back up, could be a double bottom. Then this is what you're looking for buys later tonight. If the buyers can break above this red zone, you see they tried there, failed. That's why we took the sell. So if they come up again, close above there, you flip that red to a green zone. That could be your buying zone to take it back up to this zone or to the daily high again. And then what you're following is the double bottom right now. So you're following this. One bottom, neckline, that's what we sold that second leg coming down, but it failed to break lower. So the second bottom now, that's why I closed my position where the buyers are. Everything is like clockwork in my trading. Like clockwork, like a job, clock in, clock out, go from this destination, go there, and don't ask questions. Know woulda, shoulda, couldas, get your money and get out. Because this is what's happening now. Now you got the second bottom developing with the maybe traditionally more buyers, and now it could come back and follow this exact pattern up here, okay? But that's why you got to get in and get out. It's bouncing from here to there. From there you could have bought, sold it in there. From there you sell down to there. Here you could be buying, and then same thing could happen up here if they reject it back down. But this could be that double bottom breaking up there, okay? I wish I could stay longer with you guys, but I don't have a voice anymore. I got to conserve my voice to be back with you guys tomorrow night. Everyone, join Dave if you guys want in the live Zoom session. He does New York's right now this week, right here. And then I'm doing the Tokyo sessions. Next week, we're going to move back into all New York's. If you want education explaining everything we did today, it's in here. It's in the Intro to Forex course, Fundamentals course, Candlestick course, whole library here of reading candlesticks, support resistance, chart patterns, technical indicators, strategies, top-down analysis, what we do, points of interest. If you guys need long-form boot camps on Forex, psychology of trading, crypto, risk management, this might be a good one for a lot of people to watch. And then you got your long-form webinars, guys. Tons of stuff in here, okay? And then we also put a free blog available for all of you guys on the website. Here it is, similarities in poker and trading. We talked about that tonight. Hopefully, maybe some of you guys are going to learn poker now and how to trade, and lots of free blogs available for everybody in here. And holy, I'm really losing my voice, guys. And there's a free Telegram channel pinned at the top of YouTube for everybody. Join it, please, guys. This is where we post all of our live sessions, promos, giveaways. We're going to have a big Black Friday week deal for everybody. We like 50% off, cut line, so everything at SST will be 50% off. So if you're looking to join the team to finish off this year and go into next year, all plans, we'll have codes for you guys, and join us, okay? We'd love to have you guys join our family and win with us, learn with us, lose with us, have a good time with us, okay? But I promise you, you'll get great education here from not just myself, but Dave and every other sniper here we got at SST in this commodities section. This is me, like Patrick and SpongeBob breaking computers here, but all of the snipers sharing their charts, analysis, profits, Forex Borx, killing it. Everybody in here, everybody. There's so many names to announce in here. I'll lose my voice literally mentioning everybody's names, but everyone working as a team, charts, analysis, 24 hours around the clock. When we're sleeping, they're in here. When we're up, we're all together. Okay, guys? So thank you guys so much. Join the team if you guys can. If not, just leave us a like and a subscribe and join us free on YouTube daily. Okay? And you see that if you're still holding, okay, follow the candles. Follow. The big bullish candle came right back up, failed, continue pushing down. Okay? So this could now start fighting in here. But that's why we leave runners. Okay? But thank you, guys. I appreciate all of you guys. Have a good night. Please leave us a like, subscribe to the channel, join the team, and everyone on Zoom, get some rest. We'll see you guys again tomorrow. Enjoy the later sessions if you're going to trade later Tokyo, if you're going to trade early London, and back in New York. Remember, big news tomorrow. NVIDIA has earnings in the after hours, guys. NVIDIA, okay? It's the biggest company in the world. Pay attention, please. There's going to be volatility of buying and selling in the stock markets leading into NVIDIA's earnings. And then there could be a big after-market move when they announce, okay? So if you need to kind of cool off tomorrow's trading, take it easy, okay? If you're trading gold, that's not a conversation we need to be having. But if you're trading NASDAQ, US 30, S&P 500, US indices, NVIDIA is a big part of those, okay? It's basically a big part of the entire world, okay? So I'm very super interested to see what's going to happen on earnings tomorrow, okay? And everyone, have a good night. Thank you guys so much. At least give me a like for losing my voice with you guys. And have a good night, guys. Thank you. We'll see you guys tomorrow. God bless. Good night, everyone. Thank you guys so much. I apologize, but I've lost my voice. I sound like I sound like Robert Kennedy right now. I'll see you guys. Have a good night. Justin. See you guys. Have a good night.
Hey guys, good morning, good morning. Welcome to the live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.